yesterday's market was a patience kind of market, right? It was not, hey, good morning, Jason. It wasn't anything to write home about yesterday. There was a lot of waiting, a lot of trapped in areas, a lot of just not a lot going on, right? And it's tough. You tried trading NASDAQ? Gary, even NASDAQ wasn't wasn't flowing yesterday. Um, So I watch NASDAQ every now and then. John and I talk about it. And there was a million opportunities to do nothing and just a couple opportunities to be with everything. And that's what we're going to talk about today. We're going to talk about being with everything, right? Having advantages, making sure that when you pull the trigger to get into a trade, your indicators are telling you that you're looking at a pattern that has been proven through back testing, through research, through study, through repetition, that it's going to win more than it loses, which means that you don't have to worry about whether or not your trade wins. You just have to worry about the execution, making sure that you're following the process. I labeled today's classroom "Trust the Process" because the process yields results, right? A great golf swing typically yields a low score. A great swing at home plate typically results in a great batting average. The people that throw 1,000 free throws a day typically do well at the line when the pressure's on. So we're going to focus on the process. And part of my process every morning, as my charts load up, as that first cup of coffee is going in, is I go to forexfactory.com, guys, and I'm just looking for news. I'm making sure that there's nothing going on that has the potential to bounce that market around and make it crazy. Today is Tuesday, May 9th, and it's nothing but low impact news, which is pretty good. It means that it may move the market. I'll be aware at 12:05 when class is over that FOMC member Williams is speaking. But honestly, there's nothing in here that is too terribly crazy. If I'm in a position before low impact news, I'll typically protect it, but I don't necessarily stop trading. In my plan, high impact, medium impact news, when we don't see it till tomorrow, these are the market movers. These are the ones that create spikes and jumps and bumps in the night and can really adversely affect what you're doing or simply make the market move too fast to trade. Um, and those are the ones that I'm looking out for each and every morning. The second part of my routine is the Ninja 8 Trader Stability Instructions, guys. And I know some of you are like, well, I don't want to have to do that. Well, you kind of do. And it's not the software, guys. It's not the Nexgen software. It's the Ninja Trader platform. And it's a work hog. It sucks up resources. So putting yourself where you can have your computer running the most efficiently with the least drag becomes advantageous and lessens the likelihood of any sort of challenges. So that's my routine each and every morning. Um, I'm going through news, and then I'm going through stability, and then I'm heading over to the Nexgen education page, and I'm clicking on tutorial section, and I'm reviewing my rules before I get into a trade, or I'm staring at my plan. Obviously, my plan is written out. My plan is clear, it's concise. My management plan is clear and concise. And in the morning, I'll review it. And the next thing I'll do is, guys, I'll go back to my spreadsheet and I'm going to look at the trades that I took yesterday. I'm going to study the spreadsheet and I'm going to say, what did I do yesterday that helped me out? What did I do yesterday that hurt me? And I'm going to sort of learn from my mistakes, and I'm also going to learn from my successes. And I'm going to recognize patterns in the market. I'm going to recognize patterns in myself. And then I'm going to go to my favorite looks. What am I looking for today? Guys, I have 180 looks of high probability trend trade entries. I have 180 looks of medium probability trend trade entries. Guys, this is something that you should do every day, especially if you're brand new. Get your brain right. Get in the mode of looking for the best of the best. Tell yourself, this is what I'm going to do today. Today, I'm going to stick to my plan. I'm going to focus on that high probability trend trade. I'm going to wait for my rules to be met. And I'm going to make sure that everything that I do revolves around giving myself a statistical advantage. Here you go, Gary. I'll give you mine. Just save it. Make it yours. And thanks to Mary Rocks for these awesome drop-down menus that are in here. But guys, this is my routine every morning. Get in, get ready for the day, pour a cup of coffee, get my computer set up, and then do a little bit of review about yesterday. Guys, what did you learn yesterday? There were people in here that had aha moments. Maybe it was about termination conditions. Maybe it was about waiting for that best momentum. So use that, excuse me. All right, the allergies are real here. Use that information from yesterday to make today a better today, guys. And then we're going to do today what we did yesterday, what we did the day before, and what I'm going to do really, hopefully for the next 100 years is make you understand advantages, help you recognize advantages, and get you to the point to where when you look at your charts, you see them almost instantly. And we're going to do that talking about a high probability trend trade, guys. And a high probability trade just means that every indicator on every chart is going to agree with the trade. And I'm going to give you a simple recipe to get you going. Just a simple focus point to keep it simple, to let yourself be new, to not get distracted by all the noise in the market. We're going to focus on 3 simple rules. Your large chart needs strong triggers. Whoops, there goes Discord. Guys, let me get back to that room real quick. I really think it does this to me on purpose every morning. Just likes to make sure that I'm not looking down, distracted or something. Here we go. Back up. So guys, we're going to look for strong triggers on a large chart. We're going to make sure that termination conditions are false on a large chart. And then we're going to use a small chart for entry. We're going to use limit orders at areas and triggers, guys. These are 3 very simple rules. These are 3 very easy to recognize items, but they give you the recipe for a trade. And the recipe for a trade is simply momentum, a clear path, and an entry area. You may choose to embrace these advantages, or you may choose to ignore them. It's not my place to judge, but it makes sense that the more advantages you have going into the trade, the more likely it is to give you a desired result, right? So we're going to look at these 3 rules, and we're going to break them down on only 2 charts. Everything that I do for a high probability trend trade, everything that you do for a high probability trend trade begins on the 13.2. And you're going to use that most current bar. And the first thing you're going to do really is just determine the direction of the market. If the background is green, we're in an uptrend. If the background is red, we're in a downtrend. Guys, look how easy this is. This is my most current bar. The background is red. I'm only looking for rules to be met for high probability trend trade short. My most current bar, the background is green. I'm only looking for rules to be met for high probability trend trades long. And guys, that's really going to be the first advantage that I give myself, is making sure that I'm trading with the trend. Rule number 1 happens on the 13.2 chart. Rule number 1 is strong trigger lines. We're going to talk about identifying those. And not only are we going to recognize strong trigger lines, but we're also going to talk about what they look like when they're not strong, when you're losing that advantage of momentum. And then rule number 2 says no termination conditions. And again, we're going to focus on what it looks like when a termination condition is reached, and we're going to talk about what it looks like when we've gone beyond that area, when we have a clear path. And guys, this is a broad stroke of a brush. This is taking your living room wall and that giant roller and covering as much as you can as you paint it. And then when you get everything done except around the outlets and the baseboards, then you're going to refine, right? Same thing we're going to do here. We're going to take these first 2 advantages, and when they're met, you're going to take your attention to the 5-1 chart. And this 5-1 chart is a smaller, faster chart. And this is your entry chart. You're going to refine that broad stroke of a brush provided by the 13.2, and you're going to pinpoint your area where the market is most likely to continue. And this is rule number 3. And rule number 3 is so specific. It's going to let you use a limit order to literally wait for the market to come to you. And you're just going to buy or sell a pullback in an area inside of favorable large triggers, guys. It's going to allow you to reduce risk. It's going to allow you to maximize your profit potential. And ultimately, these 2 charts, 3 rules, are going to put you in a position to take a high probability trend trade. And a high probability trend trade, like I said, straight from the glossary of common terms, is defined when each indicator on every chart agrees for the rules for the trade. Triggers are their strongest, no termination conditions exist, and there's no trouble spots between your entry or your target. Your focus on this trade for 20 days, right? The first 30 days you're with Nexgen, 20 trading days, guys, is going to turn you into a chart reader. And this is my goal for you, not to be a successful trader in the first 30 days, but to be an amazing chart reader, to focus on your charts and understand where the market is likely to continue and be able to use that continuation point for entry for a high probability trend trade. Understand where the market is likely to go using Fibonacci, using these trigger lines that we use for momentum, and being able to make an educated prediction on where the market is likely to go, and using it for stops, using it for targets, and then where the market is likely to stop, guys. And this is what we call a termination condition. This is rule number 2. These termination conditions may end a trend, but for the brand new user, a termination condition on the 13.2 chart becomes an anchor for that highest probability trend trade that we teach. That 5-1 trend trade that happens after a termination condition on the 13.2, guys, this is a trade that typically wins 70 to 80% of the time. This is the trade that we're going to focus on initially. And everything begins with momentum. And momentum is going to be the easiest thing for you to recognize, guys. When the background is green on your 13.2, we're in an uptrend. It means that your small triggers have broken above the large. And then in that uptrend, we're looking for momentum. We're looking for those strong trigger lines. When small triggers are crossed up above the large trigger lines that are also crossed up, and the space between the two, guys, and this is an important factor, the larger the space, the higher the momentum. And this is what we call a strong trigger line. And this is letting you know that the odds are favorable for the market to continue in the direction of the trade. And guys, this is your most favorable look for buying that pullback to Fibonacci support on a smaller, faster chart. You're going to see these tails with that odds favorable momentum after the fact on your 13.2. Understand that this is a potential entry for that highest probability trend trade. And you're going to hear the key phrase in the room. Odds favorable momentum. Did you have odds favorable momentum? In a downtrend, it looks exactly the same, but go in the other direction. Smalls below the large are wide. They're angled in the direction of the trend. Once again, the space created between the two lets me know that the odds are favorable for the market to continue down. And it gives me the absolute best look for selling pullbacks to resistance on that smaller, faster chart. There's another one of those tails, getting me into that highest probability trend trade, guys. If you commit to momentum, it creates an advantage. When the small triggers work their way back into the large triggers, we call this a weakening of the large triggers, guys. And the reality is that anything can happen up or down. You give away the advantage of momentum. And what you'll notice is if you take a big snapshot of a 13.2, these anything can happen triggers tend to happen right before a reversal in the market. Anything can happen triggers. And on the flip side, that odds favorable momentum, there's one of those potential entries. The market continues. Odds favorable momentum, there's one of those potential entries. The market continues. And you'll see this over and over, guys. So you can give yourself that first advantage of momentum. Give yourself the ability to be trading a market that's likely to continue in the direction of the trend. And when your trigger lines don't agree, maybe the larger down, the smaller up, vice versa, guys, this is your opportunity to sit on your hands to wait because you don't have a statistical advantage of momentum as you get into the market. And guys, how's that? That's 3 minutes to recognize odds favorable momentum. Is everybody comfortable with the concept? You're going to look for your opportunities from the point where the small triggers break away from the large triggers until they return. Once again, there's those potential tails, those potential entries for high probability trend trades on a 5-1 chart. Going the other direction, it looks the same, guys. We're waiting for that space between the two. You guys are going to have a statistical advantage and look for that entry on a smaller, faster chart and you have those strong triggers. And then more importantly, when you have no termination conditions. This is rule number 2. And rule number 2 says, don't trade into an area likely to stop the market. Don't trade into a termination condition. Well, what are the areas likely to stop the market? We have to answer that question first, right? So I need a sip of coffee so I can keep up with you guys. You're so darn chatty this morning. These areas can be divergence highs. This magenta line that prints from a pivot, when there is a loss of momentum in the market, it's showing a very key point where maybe the buyers ran out of steam and the sellers took over, or when the sellers ran out of steam and the buyers took over. This cyan line from a low, magenta line from a high, is an area that may reverse the market. We're also looking at red Fibonacci resistance, blue Fibonacci support, or these yellow 1-to-1s, guys. And your ability to recognize a termination condition is a simple 2-part process. And the first part of that process is nothing more than price reaches an area. In this example, price bars, these Renko, Nexgen dynamic Renko bars are trending down, and they come in contact with that Fibonacci support. When price reaches an area, you're going to ask yourself where are the trigger lines. Well, if the trigger lines are above, none of them have broken through support, don't take any more trend trade shorts on the small charts. Don't look for that 5-1 entry because you've reached an area likely to stop the market. So simple 2-part process, right? Price reaches an area. Absolutely none of the trigger lines break through. Guys, you've reached a termination condition. You've given away the advantage of a clear path, right? We have the advantage of momentum. A trade is 3 things. Momentum, a clear path, and an entry area. Rule number 1 gave us the momentum. Rule number 2 is identifying whether or not we have a clear path. And if price reaches an area and absolutely none of the trigger lines break through, guys, that clear path is no longer there. No small chart trades. And when this termination condition creates a full reversal of the market, do you see how everything says down, but then the smalls work their way above the large and it changes the trend? The large roll from red to green, changing that overall direction, and then the smalls ultimately end up above the large. There's one of those tails. One of that highest probability, first 20 days, typically wins more than it loses. High probability trend trades, guys. That's your best of the best. The termination condition that creates the full reversal. You'll also see it from a top. Termination condition creates a full reversal, guys. We call this a strong top. We call this a strong bottom, guys, and this is the anchor for that highest probability trend trade. So I'm going to ask, we've got 30 of you in here. Some of you are new. Give me a Y in the room if you're with me, guys. It's important that nobody gets left behind. If you have a question, ask that question. But it's really a pretty simple process. And here's the easiest picture that I can give you. On the left side, price reaches resistance, right? None of the trigger lines have broken through. All of your trigger lines remain below. Guys, this is a termination condition. The area is not broken. There is no clear path. Easy peasy, right? Over here on the right, both the small and the large triggers break above resistance. The area is now broken. You have the advantage of a clear path. You also have odds favorable momentum here, right? And there's one of those tails, one of those potential entries on the 5-1. Guys, this is pretty black and white for that high probability trend trade. You either have a clear path or you do not. That's it. But as you grow with the software, I'm going to bring you back to the glossary of terms real quick. And guys, this is like a beacon in the night for you adrenaline junkies. Your ability to recognize a high probability trend trade, your ability to read your charts is going to take you to what we call a medium probability trade. Do you have to take them? Absolutely not. You can take whatever trades you want to take. If you have the most exercised patience bone in the world, you may stick to high probability. But a medium probability is defined as when most of your indicators line up for a trade. However, a small issue exists. And it's so important to me that you recognize that issue is singular. Not a bunch of issues exist, or not, I hope that it wins. Um, this is going to be the vast majority of your trades for most people. But when you're executing a medium probability trade, you're going to have to take them and manage them assertively. And your ability to read your charts is going to identify that singular issue. Your ability to read your charts is going to allow you to manage them assertively. Um, Paul, if there's trouble in your way, your chart reading is going to help you identify that trouble. You may take a portion off at that trouble spot. You may get to break even, but there's an assertive management style that goes with it. And your ability to read charts really is going to allow you to do that. So your first medium probability trade for 99% of you is going to be what we call a 50-50 trade. Guys, a 50-50 trade means that your small triggers have broken through an area, but your large triggers remain below. So this is an area with the potential to break. And I'm going to say this again, and I say it really loud every day. In order for that area to have a better chance of breaking, guys, you have to have odds favorable momentum. I'm going to see at least 5 of you today try to take what we call this 50-50 trade with weak trigger lines. It rarely works. But when the smalls are well outside of the large are wide, they're angled in the direction of the trend. When the smalls break through and the large don't, guys, the area has the potential to break. Strong triggers break things. Momentum can break areas. But you do not have a clear path, guys. And this is your small issue. Don't let it compound. Not trading advice. This is just kind of a PSA from years of experience. Because look, when the small triggers break below, the large triggers don't, we still get one of those tails. You still get a potential trade, but ultimately that area doesn't break. The market ends up reversing, going the other direction. So recognizing that 50-50, understanding that you do not have a clear path, is going to help you when you start incorporating those trades. So can I have a why in the room if everybody's comfortable? Strong trigger lines get things going, right? The advantage of momentum. No termination conditions on the 13-2 is a clear path. I'm going to show you one more termination condition that may eradicate you of that clear path, because sometimes the market will turn from beyond the areas. Sometimes the market will have odds favorable momentum and seemingly turn out of nowhere. There's one more termination condition, guys, and this is also the termination condition that's going to help you manage assertively. And you're going to see this on a smaller, faster chart, a 5-1 chart. And it's 3 divergences in the same price range. This may terminate the trend. So as we go through this, your first potential termination condition is the 3 divergences. Your second termination condition, adding strength to the first, is when those small triggers work their way inside of the large, right? Remember the trigger lesson, odds favorable, lots of momentum. Guys, when those small triggers work inside the large, even on the 5-1, anything can happen. So this adds weight to these 3 losses of momentum. And then still more powerful is when that final pivot is higher than the previous from a low or lower than the previous from a high. It's that head and shoulders pattern. It means that not only did we lose momentum 3 times, but price couldn't exceed that previous pivot, guys. You're seeing a very definitive slowdown in the market. Visually, the momentum is going away. This will also help you manage assertively, because if you recognize this while in a trade, It'll allow you to exit that trade before the reversal happens, right? You'll be able to see this happening live in real time, and you'll see this look from a bottom or this look from a top in situations where the 13.2 isn't giving any indication of slowdown. You're going to recognize it on a smaller, faster chart. So you'll be able to incorporate that momentum. You'll be able to incorporate that clear path. And guys, now we're just going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. And that's going to give you the advantage of the entry spot where the market is most likely to continue. Every trade for the high probability trend trade originates from an area, guys, and that area is inside of favorable large triggers. And when we define favorable large triggers, I'm talking about the large and the synthetic overlapping, one on top of the other, piggyback, whatever you want to say. Two snakes become one. Because when these trigger lines are one on top of the other, it creates the smallest window of opportunity. It creates the smallest point where the market is likely to continue, which means that you can reduce risk even more and increase profit potential even more. So when you're looking for the entry, guys, when those advantages are in place, this is what your 5-1 chart's going to look like. You have the advantage of momentum. There's a clear advantage with a clear path, right? Your 5-1, that smaller, faster chart, that refinement chart, is going to have tons of up bars as you look at the singular bar on the 13.2. You're going to focus your attention on the large triggers coming up, one on top of the other, strong. In an uptrend, they should look like a shark about to breach. And you're going to identify the areas that are falling within them. Fibs, mid-bands, and one-to-ones, guys. This is where trend trades happen. Fibs, mid-bands, and one-to-ones. Right now, we've made the decision that it's time to take a trade, but the rules say I'm going to buy a pullback, which means that I have to wait for this market to come down, a small retracement in price that's counter to the underlying trend, in order to get into the market. Your pullback begins with a reversal bar. And a reversal bar is your first down bar after all of these up bars. All you have to do is look at your large triggers and what are the areas inside? Fibs, mid-bands, one-to-ones, guys. Both your mid-band and your large triggers are moving averages. So as this market comes down, these are moving up. If your mid-band is a tick above, it's going to fall within. You're going to take your highest point for a long trade, your highest area of support inside of favorable large triggers, and you're going to right-click on your chart and you're going to activate a limit order. And you're going to wait. What you've done is you've identified where the market is likely to continue from the highest point of support to the lowest point of support because of the momentum on the 13.2, because of the clear path on the 13.2, you're entering at the top of that window. And if the market pulls back to that highest point of support, it's going to hit your limit order. You're now in a long trade. And you're in a long trade with that recipe met. The advantage of momentum, the advantage of a clear path, and the advantage of an entry area. And guys, this is your first trade. This is your best trade, your highest probability trade. This is the trade that stacks advantages in your favor and has been proven to win more than it loses. Your protective stop will go below the window of opportunity because this is where the market shouldn't go. If it goes beyond that window of opportunity, if it exceeds that point where the market is likely to continue, guys, you want to be out of that trade. And anything that wins 70 to 80% of the time is mathematically obligated to take a loser 20 to 30% of the time, right? Be mentally aware for that. You will not win every trade. But by using these advantages, by focusing on the execution, this is a trade that I'll take 1,000 out of 1,000 times. Because more often than not, this is my result. Profit target reached, guys. You can see the highest point of support does get overrun a little bit. It goes right to the middle of that window. My stop's down here protecting me. But once it begins to move in the direction of my trade, I can reduce my risk behind. Because I wait for the pullback, I've increased my profit potential. I've reduced my risk. And guys, I'm going to show you one of the most common entries for brand new users. As you wait for that window of opportunity, guys, you can draw it out from the highest point of the triggers to the lowest point of the triggers, and then squeeze it down to the highest point of support to the lowest point of support. New users get excited. That is a horrible color for class. And I'm going to see entries right at the top of this bar, staring at ticks rather than areas. And a lot of you are going to get in here initially, and that's okay. But it increases risk, guys. That fear of missing out is going to increase your risk dramatically because your stop is still all the way down here. And until this reversal bar happens, you're not moving that stop. So you have exasperated the amount of money that you're risking on this trade. The flip side is you have minimized dramatically the amount of money that you can make on this trade. And this becomes a matter of trust. Trusting the rules, going back, studying, doing the research, seeing this set up time and time again, and getting to the point to where you're comfortable and confident, and you can identify the advantages, and you have this database, this history of seeing this work over and over, guys. And you're going to do that with simple study. When on the 13-2 you have odds favorable momentum, when you haven't reached that key area, if you see one of these tails, circle it. We're just studying historically. We're building trust in the methodology. If that circle lines up on your 5-1 at an area inside of favorable large triggers, whether it's a long or a short, guys, your rules are met. Your job as a brand new user is to take that picture, to post it in the class, right? And even more so, tell me why it's a winner. Tell me why you got into the trade. Did you have odds favorable momentum? Were there no termination conditions present? Was there an area inside of favorable large triggers? And where did you expect that trade to go? Guys, if you annotate every chart that you give me, you're going to get feedback every day on what you're doing, making sure that you're following rules, making sure that you're seeing things the way you need to see them. The more you annotate a chart, the better our conversations become. In this study process, guys, this is your 13-2 on crude oil. When I have odds favorable momentum and no termination conditions, there's one of those tails right there. That tail pulled right back to support inside of favorable large triggers, right to the top of the window, guys. That was a potential opportunity, and I imagine you guys are going to show me these pictures today. As I scroll back, once again, those smalls are beginning to accelerate above the large, coming from a termination condition. If I circle that tail and go back, that market pulls right back to support inside of favorable large triggers. Guys, your job is to be able to recognize this look and to trust it. Notice that it's coming from a termination condition. Price reaches a divergence low. None of the trigger lines cross. Red go to green. Smalls break above. There's your tail. There's your trade. Guys, are there any questions about the high probability trend trade? Your job now that you have the rules is to scroll back and look for those rules being met. Just scroll back. Look for that odds favorable momentum. Look for those tails. There's a circle from yesterday. Same thing. Taking pictures. Every picture that you take in the market, if the rules are met, should go into your favorites look section, right? What's it look like? I'm going to randomly click one, and let's see what it looks like. It looks like odds favorable momentum coming from a termination condition. Pull back to the area of support inside of favorable large triggers. And there's those profits. Pretty cool, right? 180 pictures, guys, in this spreadsheet. And all of them revolve around the perfect entry. This checklist-based entry. This mechanical, emotionless, stacking the advantages entry. Here's a copy of that checklist for you in the room. Guys, this is the first part of class. We're just going to talk about rules. These are your rules. Print this out. Put it on your desktop. Police yourself. Make sure that you're comfortable with what you're seeing. The next thing to do is to steal this example plan. Guys, this is an example of how to write your own plan as a brand new user. For your first 20 trading days, Guys, focus on your entries. Nothing but your entries. Use the phrase my trade is, and you're going to define that entry point. Your trade is the high probability trend trade. To enter that trade, you must have the conditions of the checklist met. Guys, begin the process of holding yourself accountable for always taking the correct trades. Here's your checklist, the same one that I just put in there. Is the market coming from a good top or bottom? Not mandatory, but it's going to increase the likelihood of success. It's going to put that win percentage up higher. But these are the three that we're really looking for, guys. Odds favorable momentum, no termination conditions, areas for entry inside of favorable large triggers. You need to get yourself in a position where every time these rules are met, you pull the trigger without hesitation. Every time these rules are met, you don't worry about what happened in the last trade, and you're not concerned about what's going to happen in this trade. You know that this checklist provides a statistical advantage. And then you need pictures of your perfect entry, right? Long, short. This is nothing more than the entry. It has nothing to do with whether you won or lost. Guys, study, go back and circle those tails. Steal pictures from class. Every time somebody takes a high probability trend trade and we post it in the room, steal it. Put it into your favorite looks section. Go to the manual. Take pictures of perfect trend trades from the manual, but start burning that entry into your brain, guys. And the more pictures you take in the first 30 days, the faster you're going to get to where you want to be. Once you've defined your entries, guys, you're still learning to read your charts. You need to have a management plan, right? You've got to have something in place to get out of the market if you get into the market. Well, a super mechanical, no emotion, no opinion, pragmatic approach tends to be the most straightforward approach for new users. Here's an example of one. Trade 2 contracts. Your initial stop will be 12 ticks. Guys, you're going to adjust that 12 ticks above or below the window of opportunity. It may be 8, it may be 15, but 12 gives you reaction time from the entry. When you get a reversal bar in the direction of your trade, you can move it 2 ticks above or below that reversal bar. Take contracts at 100, move your stop to break even, guys. Get that dopamine kick, that quick 100. Get to break even. Your second target will be 200, guys. This is the most methodical plan that I know, and it really works out. You're going to have a lot of $100 trades that hit break even. That's okay, because what you're doing is you're learning to read your charts and you're learning to manage your trades. But if you allow this to be your path for the first 20 trading days, guys, you're going to understand how to read your charts. You're going to understand fluently where the market is likely to continue because that's your entry point. You're going to understand where the market is likely to stop because termination conditions will keep you out of the trade. And you're going to understand where the market is likely to go. Hopefully to that first $100, to that second contract. But you'll begin to recognize, because every great entry has a management opportunity. The idea is to build a foundation capable of winning consistently as you grow with the software. As you begin to read your charts, guys, you're going to see more and more. But every perfect entry creates a management opportunity. So not only are you going to go back and talk about your great entries, but then you're going to start taking those great entries, looking at your indicators and understanding when holding for bigger moves makes sense, and you're going to start understanding when holding for bigger moves doesn't make sense. You're also going to do that by posting in the room. Hey, Mark, here's my trade. This is where I got in. It fit my rules 100%. I got out of the trade right here because I wasn't sure. And we'll talk about, look at this momentum. Look at this clear path. Everything about this chart says let that second contract run. So we'll have management opportunities, conversations. But if you focus on the best of the best for the first 30 days, guys, if you give yourself that highest chance of success, focusing only on entries, going back and studying. DL070, talking about building a plan, patterns. Talking about identifying your best of the best entry and committing to that entry for 30 days, making sure that you can follow the rules to give yourself a statistical advantage. Is there something you'd like me to speak about again? Go back, review. And welcome to the classroom, by the way. That's a new name. I don't recognize it. Nice top, maybe a term condition, not even a 50-50. Do one-to-ones make a term condition? Trade made the first target. Divergence on the 5-1, move stopped on remaining 3 to break even, was stopped out. Those both would have made it, albeit after 2 hours hitting original stop, location of 41.54. What's the best practices for moving to break even? It did get to within 2 ticks of original stop after moving it. So DL070, let's talk about it. You were in at 51, so you were in at a mid-band inside of favorable large triggers because of odds favorable momentum, right? Am I reading that right? You had smalls below the large are wide. You took an entry, cool. So DL, let me take a picture of your picture, and thanks for posting. I love this. There's one advantage that you chose to give away, and that was a clear path. So what happens here, and you've got a couple great examples on this chart. Let's go through a couple lessons here. The first, not even a 50-50, right? This is very much a termination condition. Price reaches those one-to-ones. Absolutely none of your trigger lines break through. So this is textbook, 100%. This is an area likely to stop the market. Of course, it's never guaranteed, right? But it may create a reaction that pulls you out. It's a one-to-one. The other thing that I notice on your chart, DL, and this is a pattern that's called the gap theory. When you reach Fibonacci, when price accelerates away from those large triggers, it's like a slingshot. Whoops, where'd it go? Get back up here. When price accelerates away from those synthetic triggers too fast, too far into a Fibonacci area, it'll typically snap back to the triggers. So DL, tell me if this is what happens as we look at your picture. Price probably pulled up right about to here, right? To those large triggers, bouncing off of the one-to-ones, and then continued down. Sound about right? And this is just a pattern after your first target. So the momentum pushed it right back down probably to that one-to-one, right? Right to that key Fibonacci termination area, at which point it bounces, closes the gap to the large triggers, and then probably figures out. So awesome. So what you've done here is you've taken a trade, right? And it stayed there. Yeah, yesterday was pretty slow. But this is just a pattern, and this is also not necessarily a nice top. When we talk about good tops and bottoms, your best of the best look, and let me just help a little bit. Your best of the best look for a good top is none of those trigger lines break through. And that just kind of creates an advantage. Your best look for a strong bottom is absolutely none of those trigger lines break through, because one of the patterns that we recognize a lot, and let me just open up my 13.2 here. There's consolidation, but a lot of times you'll get that move down and it exceeds the areas, pulls back to resistance, and then finishes the move to that key Fibonacci area. So when it's not coming from a very solid top like we see here, like this is a great top, pushes down to what isn't coming from Fibonacci, pulls right back to that mid band and the resistance, and look, there's that gap back to the large triggers that gets closed for continuation down to that next key area. And then ultimately there's another one of those bad tops right up to key Fibonacci. Large triggers don't follow. Price snaps back, continues down next to that major area. Great picture, DL. Thank you. I think there was a lot of good lessons in there. Does that help you a little bit with at least the whys? And it all starts with the termination condition. Absolutely. And guys, this is what we do every day. And this is your fastest path to becoming a confident trader. And DL, what a great segue. Thank you for posting that chart. Guys, your step-by-step path to becoming a confident trader, ASAP. The first thing is post those trades in the class. And DL, you did probably one of the best jobs annotating that I could have ever hoped for. You told me everything that you saw. You told me everything that you were thinking, what it did, why you think it did it, and it created the path for a great conversation and create a little bit of clarity. And that's the really the first thing to do. So DL, now take that same picture, annotate it with that termination condition. Remind yourself that that was the challenge that probably created the bounce. Annotate it with that gap theory explanation, that when the trigger line synthetics are almost a full bar away there and you reach Fibonacci area, it's likely to close that gap and it pulls the advantage out of this short right here. And that's the second half. Get it to the spreadsheet, guys. And like I talked this morning, go back and review it tomorrow. Put yourself in a better position. But if you really want to be a confident trader, guys, if you want to be a confident chart reader, learn the rules for when it's okay to trade. And that's really the key. Don't just learn what the words say, but learn what it looks like. Take those pictures of rules being met. Simulate your trades daily. Post pictures in class until you're sure that you have the correct rules. Sometimes we trade in determination conditions. That was my weak point, guys. I love trading in determination conditions. I still do it from time to time. I form opinions. That's my Achilles heel. So I have to make sure that I'm always following my rules and I give myself that clear path. You don't want to practice the wrong trades because while you may get away with it for the short-term victory, it's typically a path to long-term failure. Simplify. Can't stress this enough, guys. Keep it simple. And especially in the beginning, the easiest way to keep it simple is focus on that high probability trend trade for 30 days. Give yourself one thing to focus on. And then as you grow, you'll look at more, but learn the rules, learn the looks so they become easy. Guys, this spreadsheet, I'm going to put it in the room one more time for you. This spreadsheet has 180 pictures of rules-based entries. You should own a spreadsheet with this many entries, guys. If you don't, I just posted in the room. Steal it. Take 30 minutes tonight, click on each of these links, and take a look. Start burning that image into your brain. And then after class the next day, guys, or before the next day, you can download the replay data. You can go back and retrade. You can take the trades that you skipped. You can skip the trades that you shouldn't have taken. You can use this for management opportunities, right? You can actually pause it and read your indicators, make sure that the rules are met. And guys, the idea behind market replay isn't to be this super Johnny on the spot, look at all the money I made. Market replay is going to let you go back and see the potential for winning when the rules are met. It's going to show you the potential for losing when the rules aren't met. The idea is you're building confidence through repetition, fixing mistakes, right? Creating that muscle memory. Take pictures of those correct trades and guys, bring them to class. If you market replay at night, bring it to class the next day. I want to see it. Paul used to do that to me. Paul would market replay every night and every day. He'd have 10 to 15 pictures. Gary used to market replay 10 to 15 pictures every day, guys, and they got better and better for it. Repeat this process every day until you're always taking the correct trades, because if you're always taking the correct trades, well, then you're taking trades that have been proven to win more than they lose, right? And then you get to go test your plan. In testing your plan, the easiest way to do it, guys, is go into one of those prop firms, whether it's Apex or Earn Best or Top Trade. I don't care which one you use. But what it's going to do is you're going to test your trading plan and make sure that you can execute under pressure. Make sure that you can follow your rules, right? Miel, which market? Crude oil's coming off a termination condition. I know live. S&P, crude. S&P is working its way down. I don't know. Does yours look like mine? But just so in the last 15 minutes, that's all we've gotten. Actually, in the last hour and a half, this is all we've gotten. So yeah, it appears to be crawling, Miel. What a great time to talk about how to get there, right? Um, so guys, when you guarantee yourself that you're taking the correct trades, that's where these prop firms come in. Control a lot of money with a little money. The S&P needs CPR. It needs paddles on the chest, right? Knock it back into rhythm. And guys, that's your path, right? This is what we talk about every day, guys. We talk about the same thing every day. So if the market's not giving you rules met, blow it up. Go back and see when the rules were met. Look for those. Odds favorable, right? Look for the odds favorable momentum. Look for the clear paths. Look for those tails. If the market's not giving you a trade to take, go back and do some study. Go back and recognize patterns. Price reaches resistance, guys. Large triggers are a full bar away. Let's see if it closes the gap to those large triggers. Here's one of those bad bottoms, not coming from a Fibonacci area. Let's see if they finish the move down to 41.24. Patterns that we recognize. John says not much news to drive the market the last 2 days. That's true. It'll loosen up. It has. You've only been watching it for 28 years. So guys, the first half of class, good morning, Marshall. The first half of class is all about rules, right? Looking at rules, waiting for advantages, break even 4 ticks with a divergence at the small, guys, taking opportunities. This one comes from an area inside of favorable large triggers. Takes some quick profits, takes the pullback, pivot stop out, creates a pivot stop out up to the area. Good morning, Debbie. But guys, do you recognize this is the exact same concept, right? Everything begins with odds favorable momentum and a clear path over here. And then on a smaller, faster chart, looking for an entry, guys. These are different time frames, but it's the exact same concept. All charts agree. Because when all charts agree, your life becomes easier, guys. Keep it simple. Focus on study. Go back and study over and over, guys. Strong triggers, no terms, circle a tail. If it comes back to areas inside of favorable large triggers, it's a trend trade. I'm going to give you this picture because this reminds you that we're not trading tails, right? We're trading areas. This area identifies where this tail is likely to happen. And I'll tell you what, let's see if this market gets moving a little bit in the 10 o'clock hour. I'm going to minimize this. I'm going to let you guys, is crude doing a little more? Yep, crude's got more chance to do everything, guys. Here's a termination condition that created a full reversal that's providing odds favorable, right? We can start going through that process a little bit. I'm going to take a few minutes, guys. I'm going to go rest my voice. I'm going to give you guys the opportunity to watch the market take a trade. When I come back, I'm going to start looking at your charts. We're going to look at the pictures that you posted. If there's a question that you have, please post it. And I'm going to put this in the room. Please post your pictures or questions. Mark Novak, that's me, encourages you to participate in your own education by asking any question. Don't be scared or intimidated. Guys, post questions no matter how trivial you think they are, because someone else has the same question. And every time you guys post an amazing question, what happens is 10 of you get the information that you were hoping somebody would ask the question about. So be that person. Price reaches a mid-band, large triggers are a full bar away. Guys, just for grins, let's see if patterns repeat themselves and price comes back and closes that gap. It's never guaranteed, but it's something that I see a lot. I'll be back in just a few minutes and we'll get that second hour going. All right, and this is why we use the phrase may, guys. Patterns, likely, stuff like that. Doesn't always happen, but if you go through and you study patterns over and over again, ultimately you end up seeing the same thing. And when you see the same thing over and over again, it just makes it a little easier to make good decisions. So guys, here comes the second half of class. The second half of class is I'm going to come over to our chat room and I'm going to scroll through up and down and I'm going to start clicking on the pictures that you guys have posted. I'll go back and forth so that I make sure that I don't miss questions as we go through. And guys, your pictures don't have to be trades. And it's real important that you guys understand that. Your picture may be this right here and just asking, whoops, hey Mark, is this a strong top? And post it in the room and we'll have a conversation about strong tops, you know. Is this a termination condition? Post it in the room. We'll have a talk about termination conditions. Gary got us going today. Gary, termination condition, potential trade if rules 1 and 2 are met. So you're saying that if you have odds favorable momentum and a clear path, then you'll look for a short, right? I don't know that market flow signaled the top so much. It looks like it's caught in a little bit of a range right here. Support holds, bad top, pulls back to support. I'm not sure what happened, but I love it. All you're doing is going through and reading charts, right? Reading indicators. What do I see? My rules aren't met, so let's talk about what I see. On the S&P, everything says down. Weak triggers. And guys, weak triggers and multiple divergences push it up to a higher point. Loss of momentum. Rules not met. No trade. Gary, great chart reading this morning. Carl says trend trade short. All charts agree. Odds favorable momentum. No termination conditions. Area for entry inside of favorable large triggers. When that market comes back to support, you take, it looks like we got a loss on that one. In at 40, out at 47. A little bit tight on the stop there, I think. 2 ticks above the reversal bar puts you at 49, actually keeps you in this trade, Carl. If you're using that 2 ticks above a reversal bar method. One thing that I prefer not to do, guys, this is my own personal trading, is that if I have Fibonacci resistance right here, and I'm anticipating a market to continue down, I'm not putting my stop right at the bounce point. I'm putting it where the market shouldn't go. The market shouldn't go beyond that resistance. And if it does, then at 48, 49, I'm willing to get out. But bouncing right off of 47, right at Fibonacci resistance, I want to be on the other side of it. I hope that made sense, Carl. All right, Paul, let's see what you're doing. With that strength, maybe don't manage quite so tight. Could have hit your larger targets. So termination, full reversal, odds favorable, pulls right back to the area. Paul, you get in higher because of the divergence. And you are trading into a potential termination condition here, right? You do have a blue fib. The triggers aren't quite through. Everything says down. That was your best shot. And then your management side, let's take a look at it. You're pulling back. You're getting in between 1-to-1s and the mid band right there. So getting a little flexible on your rules, I think. As you come down, break even on the trade. You scroll back this morning and it was there. Huh. Yeah, without a termination, without a blue fib here, no reason to tighten up that quick. I would agree with you on that one. With that much momentum and absolutely nothing in the way, man, let it do. It may have started printing. So that was your, and guys, your software updates every 2 hours, every 120 minutes. So that was your 4 o'clock. It started printing right at 4 o'clock. You were in that trade right about when it started printing. So it snuck up and got you in the moment there. I like the trade, but yeah, without that blue line there, Paul, let it do what it's going to do, right? Especially at 4 in the afternoon. You know it's going to move a little bit slower. You know that there's rookies out there kind of doing their thing. You got to let them work through it a little bit. It's hard to do sometimes. I took a crude short yesterday. It took it 25 minutes before it finally went to my targets. Like 25 minutes I had to sit and just watch it do virtually nothing because it was later in the afternoon. And then Gary recognizing that channel, right? Support holds, support holds. They're just trying to figure out what they're going to do. Great recognition. Say, until they know what they're going to do, I'm just going to do nothing. I'm going to wait for rules, going to wait for advantages. What a concept. I love it. And let's see where we're at here. Guys, this is what we're going to do all day long. You post, I talk. Jose, coming from a termination condition, absolutely. Flat lifeless triggers though, isn't it? Small haven't even really gotten. It has the potential. I like it, but you've got a split. It's flat. No divergence. Trying to anticipate that breakout. They didn't let you. Jose, if this one wins, it wins huge. If that one doesn't win, it typically goes quick, right? You're trying to break out of a range. You're trying to take that first shot from the termination condition to get up to that area, and they just weren't having it. Crude oil got caught in a fight, and you got caught in the middle of their fight. And there's a termination, not a 50-50, Jose. You're smack dab into that fib, right? Am I seeing something wrong? So your termination, and here you're 50-50. And it's a great looking entry. But you definitely gave away that advantage of a clear path, and the market reacted appropriately, as we would expect it to. 60% of the time, it works every time. And then this one I love. And I saw this on Paul's, and I was hoping that I would see this one, guys. Odds favorable, clear path, perfect entry. Didn't work. Jose, I mean, guys, this isn't just Jose. I want you all to see this. Odds favorable, no termination conditions. No, Jose, this was great. Beautiful entry. The only thing I might say is you had your reversal bar. No reason to give so much up, right? You had your reversal bar. And if you're looking at your 21, look at that termination condition on the 21. 2 times over. Weak triggers at support. If you're going to have this chart, man, use it. Use it. This right here, and was this yesterday? Yeah. This right here kept me out of this trade. Because I won't trade into one-to-ones. I don't care what time frame it is. Well, on 5-1s I will. But on a 13-2, I won't trade into one-to-ones. On a 21, I definitely won't trade into one-to-ones. So you had that termination condition. But if it's a 2-chart look, and guys, most of you are using 2 charts. I was coming from a good top. I had odds favorable momentum. I had no termination conditions. And I had an area for entry inside of the 5-1. The only coaching that I could possibly give on this one, Jose, is after that reversal bar, especially if you know that the 21 is showing you all sorts of shenanigans at one-to-ones with no triggers anywhere near it. Tighten up quick, because if this one doesn't win, it's going to not win fast. Does that make sense, Jose? You've got the information. Whether or not you choose to use it is totally up to you. All right, so Miel, couple things. Are you listening? I hope you're listening. So here's the first part. I'm assuming that you're doing all of this every morning. Cash, tick, optimum, all that sort of stuff. So the next question is, Miel, how many different charts are you running? How many workspaces? How many charts on each one? You repair a database every day? Cool. So a lot of times, so my computer, 1 workspace, 4 charts, okay. And you're using the Nexgen workspaces, the ones that John put together that are designed to run a little bit smoother? No, and they're different platforms. And it's important to understand that they are different platforms. Are you doing Apex? Is that why you're on 8? And guys, this class isn't just for patterns, right? This class is also for making sure that you're comfortable. Cool. So Miel, let me tell you what I do. Let me show you a picture. And you know what? I'll just show you a picture through Paul's. I'll steal Paul's picture. And this is what a lot of people are doing. My computer has what was identified as a tree trunk of a graphics card. So I have challenges sometimes running NinjaTrader 8 because my graphics card can't keep up with the workload. So I'm doing exactly what Paul's doing here. Notice that he has a NinjaTrader 7, 13.2, 5.1 range chart, and he's executing on a single chart on NinjaTrader 8. And Paul still has all of his synthetics in here. When I'm doing my synthetics, I'm not even running synthetics. Absolutely. So, Miel, you have a NinjaTrader license, correct? You're paying NinjaTrader for that monthly use? Of course, it's the same market. Yeah. So run your NinjaTrader license on NinjaTrader 7. And then on NinjaTrader 8, run the one that Apex provides. And they will match up 100% because it is the same market. I don't know if you need an account with them. Rain, that would be a question for them. But I don't know if you need an account or if you can just get the platform. It seems like you'd be able to just get the platform. But I don't know for sure. Yeah, Miel, that's worked great for me. Yep, and absolutely. Apex gives you that Ninja 8 license account, but if you're going to run 7 with it, then you need to be able to run NinjaTrader. I have the lifetime, and then this is just pricing. Yeah, so that's pay as you trade, no monthly fees, monthly lifetime. One-time payment, monthly, I guess you can get it $99 per month. Yeah, so if you have a live pet, so you're good. So what I do, Miel, is I build a workspace on NinjaTrader 7 that has everything that I need, and I'll literally just wedge a spot in between the two. Yes, Rain, you have to have NinjaTrader 8 for Apex, which is why a lot of us are just dropping a NinjaTrader 8 no tick data right there in between the 7 workspaces. Does that make sense? And Miel, let me know if you need any help with that. And Rain, seriously, if you need any help, all you got to do is ask, guys. We'll get you where you need to be. And if we can't, we'll find someone who can, right? All right, David, let's see what you're doing today. Is the one-to-one the area for the triggers to break? Well, David, great question. So the one-to-ones at 72.75 were the area to break, right? And you identified the next area at 72.90. And once this area was finally broken, you were smack into a termination condition here. And that's the one that held. So once these broke, it really didn't give you any room to get to that next area so much, David. But yeah, that would have been the first area to break. Just like this resistance needed to break as everything was coming up. And that big fib on the downside. Okay, I see what you're saying. Sorry. Yep, as long as the large triggers are above it, it's a 50-50, right? So it would need to break those one-to-ones. You'd want to see them below. And this is one of those looks where price often pulls back to the large triggers, but it didn't in this case. But yeah, that would have been below 72.75 becomes your clear path. Hope that made sense. And then Gary, same thing, recognizing that gap theory. And why don't you just trade arbitrarily the gap theory? Because that thing railed down from that termination condition, didn't it? Some people try to go long. Well, it's going to snap back. Excuse me. Guys, it's never guaranteed to snap back, especially coming from a great termination condition. But if the potential is there, it helps you make good decisions, right? It helps keep you out of trouble rather than jumping blindly into trouble. All right, Jose, you take the momentum style, right? Termination, everything down. You take the mid band to get down to the next levels. And Jose, you had terminations on every chart. Nice little momentum style trade, right? And Gary, you said you missed the HVA trade. I don't see where HVA rules were met. You don't have a good bottom on the S&P. Your HVA line is below all of your trigger lines. Gary, not an HVA trade. It never even made it to the HVA line, right? You're on the wrong side of everything, and you are smack dab into resistance. Definitely not HVA rules met on that one. And guys, HVA is just a second trade. And then David, good recognition of termination conditions, and I love it. You let it clear, you hop in. Your exits are getting better and better, David. Just jump in, quick profits, right? Could have used that blue fib. Nice job. A week ago, you used to hold that second contract all the way up to here, so good one. And then Paul, what are you doing? Paul says, don't trade into termination conditions because the market might reverse like it does here. Amen. Give yourself that advantage. Every time, give yourself that advantage. And then David, support is reached, pulls all the way back. And now you're taking what is a medium probability trend trade I'm not sure how that worked out. We're losing advantage, but the large triggers are working below. You take an entry at an area of resistance, stop where the market shouldn't go. Let's see if that thing works its way down. Do we have a follow-up picture? All right. So Mark W. made a little. Cool. Mark, can you tell me why you're looking to buy the market at 72.03 instead of trying to go short to get there? Whoops. So guys, this goes back to, and I hope this comes with the intent that's there. One of the best things you can do, guys, and this is for everybody, tell me why you're doing what you're doing, right? Tell me what you're thinking. And then I'll tell you what I think, and we'll have a conversation. Waiting for the reversal. I got you. So Mark W., one of the most expensive accessories that I own is an opinion. And let me show you what I mean. This says down, right? The background is down. The triggers are down. The small triggers are down. The large triggers are down. The large triggers are down. The synthetics are down. The mid band is magenta. Everything says down, right? Everything says down. And what you've done is you have already formed the opinion that all of that down is just going to stop and go the other way. When it becomes really more advantageous, trading with the trend, trading with the momentum, trading with the direction. And I watch people, and John Novak just posted his best-selling book, How to Commit Financial Suicide. Trading against strong triggers, trading in determination conditions. And of course, that's tongue-in-cheek. But when we talk about advantages, and I love to talk about advantages a lot, one of the best things you can do is stick to this plan, especially in the beginning, Mark. Go with that momentum, go with that clear path, go with the entry area. And if everything is red, look for reasons to go short rather than forming the opinion that there is going to be a pivot stop out when nothing supports it. And what you're going to find is a lot more longevity in the market. And what you'll notice, if you miss the short, sit on your hands. But where you were waiting for the reversal, David was going short, trying to get to that reversal point, trying to get to that low point. I love that you posted a picture. Talk a little bit about it, though. Get used to typing on there. It'll help. And I know that you're new and you're still working things out. So the more information you give me as you work those things out, it becomes a lot easier too. Paul, pivot from space straight to resistance. You took the short with the loss of momentum. Boy, you sure held that one a long time, didn't you, Paul? It looks like you did it on Sim. So let's see what we have. You had weak triggers, loss of momentum. I love your entry. And then you just held that thing forever. Sim trade, Paul. And guys, this is a good one. Don't break your rules just because it's simulator. Because what if this one works from up here? You're going to convince yourself that an extra 5 points of risk is how you're going to make money in this market, which is rarely the case. All right, let's see where we're at. Gary. Weak triggers, not through the areas. Weak triggers, not through the areas. No rules met. No trade for Gary. John Novak. What does he say? Strong triggers, trend trade, one-to-ones, mid-bands, fibs, trigs, went all the way. Everything says down. Trading with the trend, trading with momentum, trading at the area inside of favorable large triggers. What an effortless recipe for success, John Novak, right? Let all of your charts agree. And when they do, things tend to work out. All right, Miss Mary, let's see what you did. Weak triggers, right? So you're giving away, and you identified it's weak triggers. So you get in at the top of the window. You sell the market, and you move stops before the reversal bar. And then you get back in, and then a couple divergences, and you're stopped out again. Got in after market flow signal, stopped behind the synthetics, got out with second divergence. So it looks like you had reasons for everything. Stop placement after the first one probably would have just kept you in this one all the way down, right? But you know you're giving away the advantage of momentum. So exiting with the second divergence is appropriate. Just without that momentum, it becomes a little more difficult, doesn't it, Mary? And guys, you'll recognize this. When the market is screaming, you don't have to sit through the shenanigans, right? Because when the market is screaming, everyone agrees that market needs to go down. When those trigger lines turn into anything can happen, this is where you see this little sideways on a 5-1. And guys, if you don't trust what you're seeing on the 13-2, this is going to eat you up. This is going to get you in and out of the market. I think this is right. Oh no, maybe that's not right. Crap, I'm going to move my stop. No, I'm not going to move my stop. Momentum is a great precursor. Gary, same thing. Weak triggers, loss of momentum, smalls inside of large. Just saying, I'm not going to do it with all that loss of momentum. 1, 2, 3, 4 divergences in the same general location. Good chart read. John Novak, termination condition creates a full reversal. Little iffy on the termination condition there, Novak, but because of the termination condition, you're willing to take a shot right here. A little unorthodox. Almost looks more like an HVA trade than a trend trade. But everything agrees with the up. Those large triggers didn't roll yet. But because of the great termination condition, certainly creates an advantage. Waited for the small triggers on the range chart. See, and that's the part that we didn't see. Right, guys? Incomplete thoughts. It's hard to read with incomplete thoughts. But termination condition creates a full reversal. What a great way to start. Jose, I probably did, but let's go back and revisit it. And guys, if you ever step away and you miss us talking about your chart, let's talk about it. Momentum style, right? Termination, everything says down. You take the mid band and get paid on the way down because of the termination. Yeah, I said good job on that one. Why didn't you get in at the first mid band? You had to think about it a couple times. Missed it. Right on. I love it, though. It's rules-based. You hadn't reached the next area yet. Everything says down. Just momentum off the mid-band because of the termination condition, because everything is strong. You're pretty deep, but I like it. I like it. Great trade, Jose. Absolutely, because what's likely to happen when you get to this mid-band and the large triggers are up here? it's likely to close that gap. But no divergence helps that scenario. Really strong triggers helps that scenario. I like the first one better. The closer I am to being outside of the small rather than inside on momentum. But you had terminations on every chart. You had strong triggers on every chart. That's a solid shot. And then Shogun, John answered your question. Awesome. And guys, John just illustrated that your plan doesn't have to be the high probability trend trade, right? Your plan can be anything. Tell me why you're doing what you're doing. Otherwise, I'm just going to talk about what I see. Everybody's got a different way to do it. Look at this weak triggers, but a clear path. 1, 2, 3, 4, 5 divergences on the 5-1. Does anyone feel as though we may be losing momentum? And John superimposes the 21 small triggers on his other two charts so he knows where they're at. It's a nice trade. It all starts with a termination condition at support, doesn't it, John? It all starts with a strong bottom. You've been trying to trade NASDAQ, but your NinjaTrader keeps crashing? Yeah, I can't run a NASDAQ on my NinjaTrader 8. It kills my computer. I've tried it. There's a lot going on. Here you go. Guys, if you want to do more, you got to get the tools that allow you to do more, right? My laptop doesn't support me running 4 workspaces on NinjaTrader 8, especially if one of them is NASDAQ. Easy trading computers, guys, they've built a laptop, they've built a desktop, and I've heard, I don't work for them, I'm not even endorsing them, but I have heard a million fantastic feedbacks from, not a million, but at least 10. Every person that's gotten one that I've talked to that uses Nexgen on NinjaTrader 8 is over the moon with how they perform. And then no trades when the chart background colors don't even match. That's probably a good rule of thumb, David, because if this is green and this is red, it means that your smalls can't be strong, can't provide momentum, right? Your one short, that 50-50, was coming from right here, and you got in just below resistance. Looks like you took some profits on the way. This is a tough one. Those 2 divergences can kill the party on a 50-50. I think you did it well, though. I think you got in just a little bit low, below trouble. Your stop keeps you safe, gives you an opportunity, and now you're looking at that termination condition, multiple divergences, and you're just saying, gosh, I don't have the advantage of momentum. I may as well sit on my hands for a minute. And guys, look at how price reacted to that key Fibonacci area. It got ugly for a little bit, and then ultimately it breaks through. Weak triggers are kind of what helps it get ugly. Paul, there's your bad bottom, straight to resistance, closes the gap. And now we're just waiting for all the charts to line up, right? Waiting for everything to agree. Guys, it's been a slower couple days in the market. It really has. There's been an awful lot of patience that's been necessary. If you're waiting for your rules to be met, you're probably doing all right. If you are fighting rules, if you're taking longs in determination conditions, right? If you're taking shorts with weak triggers, today's probably not working out so well for you. And that happens. It's okay. It's all right to have an off day. It's all right to have a day where you form opinions. And that's why I like to focus on simplicity, guys. Keep it as basic as you can in the beginning. Wait for those advantages. Go through that recipe every time. What advantages do I see? And if I don't see them, well, then I'm giving it away, right? If I don't see a clear path, well, then that's one advantage lost. If I don't see momentum, that's another advantage lost. If I'm trying to enter the market, not at areas, not inside of favorable large triggers, that's another advantage lost. It doesn't necessarily mean that it's not a good trade, but it means that it's a trade that has to be rooted in calculated risk, right? I know that this is what I'm missing. I know that I have to manage assertively. And that's what's going to happen. Weak triggers, no divergence. All of your areas are on the wrong side of large triggers. Little things that you start to notice over and over, guys. If these are weak and these are weak, it stands to reason that the market may push up a little higher. No matter how bored you are, no matter how much you wish it would just do what you want it to do, when the advantages aren't present, guys. Let's see what else we have going on. Go to the education page. Has everybody gone through Discord, especially new users? World wealth of information in Discord, guys. There's the 101 basics. If you're brand new with me, welcome. Go through. Talk about, it tells you to scroll up. Talking about the Rinko bar, the trigger lines, the automated software, guys. Great introduction tools, right? Everything we do revolves around trigger reading, whether it's momentum or termination conditions. There's an entire section dedicated to trigger reading, guys. You want to be a chart reader. Self-training, for those of you that don't want to play in rooms so much, John has put together. You can do it yourself. It's going to take longer. All of our user guides from the website, guys. Trading rules for the high probability trend trade, for the high volume area trade, for the momentum trade. There's an entire section dedicated to reading market flow. Chart reading section. Guys, John Novak works several weekends to put together the most common patterns that you're going to recognize. You should go through and study this. And then when you get comfortable with those, there's a whole section dedicated to advanced chart reading, finding that next level read on your indicators as your expertise allows. Paul, weak triggers, weak triggers, beautiful entry, stop keeps you safe. Higher divergence on the weak triggers, you know it's going to push higher and it gets you, sure enough. Gave away the advantage of momentum, and it behaved as though there was no momentum. Weak triggers, Gary. It's not a termination condition. You didn't quite make it. 3 or 4 ticks off, you didn't make it. The momentum isn't there to support. I mean, if you're going to take a shot, Paul did his best shot, right? He took a great entry. He didn't risk 1,000 points on it. And when this divergence printed, he said, nope, I got to get out. But not a termination condition yet, Gary. That's too far away. And one of the things that you'll notice, this would be one of those instances where they may fight right back up to resistance and then finish that move down to 7180. It's not guaranteed, but we can identify areas likely to hold based on termination conditions. Jose, I like momentum. You know, why didn't you like it? What was it about that look that made you say no? So watch this. If I take everything off, just no momentum. I agree. So check it out. No real momentum, pretty big pullback. Not a lot of momentum, pretty big pullback. And guys, this one I believe bounced off of a termination condition. Look at all the momentum. Short little pullback. Boom, there it goes. Got good looking momentum. There it goes. Weaker triggers, look at how long that tail is. Weaker triggers, look at how long that tail is. Trigger lines don't follow, goes all the way back to those triggers. There's your acceleration point, short little trigger, and that's coming off of a termination condition. Guys, this is a great pattern. Odds favorable, it continues down, triggers return. There's your pullback. Dollars to donuts, there's fibs or a mid band right here. Large triggers don't follow, continues the move down. Do you guys ever do this? Just scroll back and look. One long, doesn't work. Weak triggers, pushes way back. Weak triggers, pushes way back. Kind of flat, pushes way back. Weak triggers, ultimately changes direction. There's that tail with the odds favorable, and down it goes. Anything can happen triggers. Look at the push. Anything can happen going to the other side. Market reverses. Odds favorable. Market continues down. Guys, how do you create trust? Go through and do this. Look at what happens with nothing else. Look at what your trigger lines look like when that market begins to push lower. Look at how many times it continues when the large triggers don't follow. Guys, you don't even need Fibonacci to become a trigger line reader. Look at that perfect momentum, and that market doesn't stop for days. Perfect momentum, that market hits anything can happen. That becomes your reversal. Does that make sense? It's not as glamorous not trading live, right? It's like going to the driving range and you're like, well, I'll just hit a bunch of balls, but I'm not going to worry about form. I'm not going to worry about my swing. All I'm going to do is just hit a bunch of balls. And you don't really get anything out of it. But if you go back and you go back focused, guys, there's a lot of information there. As we pull into this resistance to this mid band, guys, your large triggers are below the reversal bar marker. Patterns suggest that it may close the gap back to those large triggers. Patterns suggest that because it's not a strong bottom, it may come back and find that next fib, especially when we're coming from such a good top. And we'll see. Time will tell, right? I don't have to predict if the market's going to turn. I don't have to predict if the market has momentum. All I have to do is read my charts, guys. And if you're uncomfortable reading your charts, all I need you to do is ask. Did you try it, Paul? So the 21.3 says it's likely to keep going down too. Will you show me a picture of your 21.3? Guys, the patterns are the same every time frame, right? Someone show me a 21.3 on crude. And let's see if a higher time frame can give us an indication. Just like the smaller time frame refines the 13.2. You're going to make me build it? I'll build it. There we go. Thanks, guys. I didn't want to have to build a chart. 21.3 has odds favorable and nothing in the way, right? Coming from a termination condition, guys. So this says probably going to go down more. This says bad bottom pulling into resistance. Large triggers aren't following. 5.1 says just hold off a minute. We're losing momentum. It may push higher. Trickle down, right? It's like trickle down economics. Tony, we're missing some charts. I'm not sure what you did there. Oh, that was a 21.3? Oh, gosh. Thank you. Yep, it is. Sorry. Odds favorable. It's so squished. Took me a second. So guys, isn't it cool? This loss of momentum keeps you from looking. And now we're to 50-50 at resistance, or almost, right? there's an area 33, and let me show you Tony's again. 33 on a 21-3, if you're identifying with termination conditions, is a midband and a fib with every trigger line beneath and odds favorable momentum. So sometimes you can take a higher time frame and help make decisions on the lower time frame, but this loss of momentum says pump the brakes, right? And if you're using that higher time frame 21-3, isn't it telling you that because this is a bad bottom and because this trigger line still haven't made it through resistance, you're not looking for longs yet, right? You got to hold off for a second. Doesn't mean there's a short to be had because we don't fight trigger lines. We don't fight direction. I hope you don't. You might. So now you're just kind of caught in an area. Now you're just kind of waiting. Your 13-2 says don't go long because trigger lines have not broken that area of resistance. Your 5-1 says my rules aren't met on the 13-2, don't do it. My 21-3 says more down is possible, but it's such a slow chart, who knows? So we're not banking on the 21-3. What we're doing is we're using the 2-chart process, waiting for a clear path, waiting for momentum, and looking for advantages, huh? Every day. I like this picture. This sums up Nexgen's trading plan. 2 easy steps, guys. Define your termination condition at Fibonacci to be true. What does it mean that it's true? It means that your trigger's rolled from the high. You get that full reversal from a termination condition. Your first trade after a termination condition is that high volume area trade. There's rules for it in Discord. There's rules for it in the user guide. If you guys are trading it, if you've added that to your plan and you need help, post pictures in the room. Everything is strong. There's your high probability trend trade that comes from a termination, guys. These are your 2 trades. That's it. For new users, high volume area is your first shot when the triggers roll from a high. Then a high probability trend trade, if it makes it to a termination condition, that area either holds, meaning the triggers roll, or it breaks, in which case we go back to looking for that high probability trend trade on the other side of it. Termination holds, triggers roll, high volume area pushes you up. Everything is strong. Buy Fibonacci support at an area inside of favorable large triggers. Going up, rinse and repeat. God, this plan has been consistent for 20 years. 20 plus years. It's been consistent because it creates a statistical advantage. It puts you in a position where you have the opportunity to win more than you lose. Statistical advantages are pretty amazing. They feel good, and when you learn to trust them, you'll never hesitate. And when you stop expecting to win every trade, you tend to win more trades. I didn't think this was true until it happened to me. And then when you stop caring about the result, and guys, it takes a lot of trust to stop caring about the result. You care about your execution because you know the execution is rules-based. You know the execution means that you had advantages in place, right? Checklist. And you know that the execution has been proven time and time again to win more than it loses. So you develop this trust and this faith and the strength of your methodology. And ultimately you get to a point where you no longer hesitate. You no longer second guess. You don't form opinions. You stop looking for reasons not to win. And you just take the trade because the rules are met. What do you guys want to talk about? This market's making us wait a lot today, right? Guys, my job, I don't know. David, are your rules met? So let's go through the rules. David, great question. I know that you're new. And let's talk about the high probability trend trade. What do you say? So when we talk about the high probability trend trade, David, the first question that we ask ourselves is the market coming from a good top or bottom? And that simply means, is there a termination condition that's created a full reversal? In this case, we never made it to that key Fibonacci area. So this is just a pivot. So we're not coming from a good top or bottom. So I'm going to take that arrow and I'm going to mark it over in the no category. Do we have odds favorable momentum? So David, if we go back to the manual, odds favorable momentum is defined in an uptrend. When the smalls are above the large are wide, they're angled in the direction of the trend. So I can say absolutely, I do have odds favorable momentum. So I'm going through my checklist here. And David, my goal for you is that you never ask me, is there a long coming? Because I'll never tell you to take a trade. I don't call trades. I only talk about rules. Rule number 2 says no termination conditions. And there's a recipe for termination conditions. The first one is that price reaches a Fibonacci area, whether it's resistance, support, one-to-ones. In this case, price reached Fibonacci resistance. However, the second part of the equation is that your trigger lines have to break through it to give you a clear path. One line of the smalls made it, but the other line hasn't, which means that I don't have a clear path. I'm trading directly into a termination condition. So at that point, once I have no clear path, that's it. It's the end of the road, and I'm no longer looking for a trend trade because I've forfeited that advantage. Forfeited, that's a word. The advantage of a clear path because I do have a termination condition present. So for me as a high probability trend trader, there was no trend trade coming. And just for grins, yeah. So David, that's what we'll talk about every day. And it's great to have you with us here in Nexgen, is we'll talk about the advantages each and every day. And I think what you did is you did a good job looking at that momentum, right? Knowing that you should be looking for longs because of the green background. And now we're just going to let this 26 area, if this area breaks, it's longs all day, or at least until the next termination condition. But notice how it's not breaking. It gave you a little spike back, right? And then it comes right back to it. And we're seeing a divergence and a loss of momentum. And that market's pushing again. And it's this sort of reaction to Fibonacci that not trading into termination conditions helps alleviate. You are right into the termination condition, Jose. You have a 5-1 fib that I don't appear to have, somewhere right in here. It's hard to look at one and just, because I can't see your prices either, but you have your one-to-ones. You had divergence, it didn't make the area. And it looks like you have a 5-1 fib that I don't. And that may be a small discrepancy in tick data somewhere. But you do have that termination condition, right? Jose, how many days back are you? 10? You've got 7206. Guys, it may be me. I'm not going to lie. It may be me. So watch this. Let me check something real quick. So I'm going to disconnect from the live real quick, guys. Nobody panic. And one thing I'm going to do is after I disconnect, I'm going to go to my data. Do not merge is important. I'm going to reset my database. And I'm going to repair my database. This is the first thing that I do. There we go. This is the first thing that I'll try. And then I'll reconnect to that live data. And these are going to re-go. So it's possible. Mark, you don't have it. Jose does have it. I'm going to check on my end. I'm going to make sure that on my end, and there we go. My live data just came back in. So it's going to recalculate. It is a 5-1 fib. Absolutely it is. How do I know it's a 5-1 fib? Because it's skinny and it doesn't extend all the way to the right. That's a 13-2 native. That's a 5-1 native. That's a 5-1 native. You just told me. You did. I'm going to give you the microphone, Ron. You're teaching tomorrow. You don't have it, Alan. Mark, you didn't have it. I didn't have it. So maybe it wasn't me. And guys, I just reset and repaired all my data, and I still don't have it. So then we go to trade your charts, right? But does that blue line at 7206 do anything for what's happening right now? Let me make sure. I am 10 days. Paul, it's been a boring couple days, hasn't it? We got some big news tomorrow. Hopefully it helps. So guys, look at the reaction off of Fibonacci resistance. Creates challenges. Gives us something to watch. I'm going to get through this day. I'm going to go watch a little golf ball fly through the air. Some days it's better to go walk on the beach, guys. Look at that. The smalls and large are all below the areas. Divergences below, 1-to-1s, resistance above, split triggers, no areas, no rules. Now we get that 50-50, right? Now the smalls are above, but the large are not. Everything's pointed the right direction. Guys, this area has the potential to break, but it has not broken because your large triggers are still below. So with that same idea, 7214 hasn't broken either, has it? We have areas with the potential to break because of the momentum, but not areas that have broken just yet, which means if you're looking for a 50-50, if you're looking for that medium probability trade, that first little endeavor into the wonderful world, it's okay to insist on the perfect entry, right? Don't give up advantages. No divergence, small window of opportunity, strong triggers. Your money's worth it. 50-50, strong triggers, small window of opportunity, no divergence. It's okay to absolutely, positively insist on the best entry if there's problems on your 13.2. Guys, I'm going to leave you with crude oil. I'm going to take a few minutes. When we come back, classroom's going to belong to you. So guys, this is an opportunity for my new people. My David AZs, my Billy Rays, my David S, my Mark W, Marshall. And guys, not just them, anybody that has a question. I want you to get real vocal in this last hour because the market's not giving us a lot to talk about. I want you to give me a lot to talk about. What do you want to focus on? Do you want to look at termination conditions? Do you want to scroll back and look for entries? Do you want to do bar by bars on entries so that you're really comfortable with it, guys? Let me know. Let me know. I'll be back in a few minutes and we'll finish strong today, guys. Back in a few. All right, guys, here we go. Final hour. Let's get into it. Gary says 50-50 setting up on crude oil. Let's talk about exactly what Gary means, right? So what Gary is saying, he's going through his list and he's trying to determine whether or not he has a potential trade. Oh, okay. I didn't realize that was your chart. There we go. Thanks. He's saying that the smalls are above the large are wide, they're angled in the direction of the trend. And this area has the potential to break. Gary, the one thing you've done is you've put your entry below the highest level of support inside of favorable large triggers. And your synthetics are still pretty low, right? So taking a look, and all Gary is saying is that this area, because of the momentum, has the potential to break. But 27 becomes that area that hasn't broken yet. And if you identify your window of opportunity, if you go from the highest point of the triggers to the lowest point of the triggers, there's two areas that fall in between, guys. So what's happening here is you have odds favorable, you have the potential to break, you have no divergence, and you have a small window of opportunity. Ron said he's got a 5-1 red fib at 72.44. So Ron's probably not taking a trade into a termination condition. I don't have that fib. I'm not coming from a termination condition that created a full reversal. That lessens the chance of this 50-50 working, right? And guys, remember when everyone was talking about that 21.3 earlier? Another way you can incorporate a 21.3, when everything is screaming down on the 21.3, it becomes less likely that a 50-50 on the 13.2 is going to be successful. I got you, Billy Ray. And guys, there it is. So, okay, the checklist, here we go. Let me give you two of them, Billy Ray. Here's the first one. And you can print this one out. Whoops. I just put it below you in the chat box. And you can print this one out, put it on your desktop, and really get in the habit of policing yourself a little bit. And more importantly, just writing these rules on your chart every time you think they're being met. And then I'm going to give you guys another one. I share this one a couple times a week, I think. It's the exact same checklist, but I've stolen pictures from the user guide and the manual to let you know exactly what each of those conditions means, right? Visually. So there's both of those in the room for you, Billy Ray. Are you comfortable downloading them out of the room? Okay, cool. And then finally, so the spreadsheet, I'm going to, guys, there's two ways to get it. If you're ever not in class, the tracking sheet's right here for you. There's the link right there that downloads it off of the website. But Billy Ray, I'm not going to have you do that. I'm going to drop mine in the room for you as well. Mine has a couple extra ones on there, I think. It won't have whatever we added today to it, but there is my spreadsheet right below as well. And that should help you out. And then guys, I feel like we talked about it a lot. When you're not coming from a good bottom, that's up to you, Shogun. I don't use trailing stops. Personally, I like to be in control of everything. And to be honest with you, I don't even know how to do a trailing stop because I'm in control of everything. Guys, do you remember the conversation when we talked about 50-50s from bad bottoms? Have less chance of winning. And then we talked about how strong the 21. And look what happened. That's a pretty cool piece of knowledge. And that's patterns. And then Gary, bad bottom, 50-50, beautiful entry. Does everything we would anticipate a 50-50 from a bad bottom to do. You ever wanted to be in a trade so bad? Then Luciano, let's see what you did. So guys, here's an idea. And I'm just going to throw it through there. Angry facing doesn't do any good. So every day, guys, every day I talk about patterns. I promise I do, over and over. Give me a hand in the room. Give me a yes. Give me a thumbs up, something. Have you guys ever heard me say that a 50-50 is less likely to work from a bad bottom than it is from a strong bottom? From a termination condition? Right. So guys, this is human nature. Human nature says, but Mark, I have waited so freaking long for a trade, I'm taking it anyway. I know this because I've done it. And guys, there's nothing worse. This is me as a new trader right here. John Novak starts talking about, hey, you know what? Everything is strong on the 21 to the downside. This isn't a strong termination condition creating a full reversal. This 50-50 is less likely to work, and the odds are favorable that the market is still going to go down and maybe reach that next fib. And then it gets closer and closer and closer and closer, and I've got my order in there, and everything that he told me I'm ignoring because I want to be in a trade so badly. And then when I get run over, I'm like, man, why didn't that work? Well, it didn't work for the same reason that it wasn't going to work all the way back here or had less chance of working all the way back here. Guys, the market repeats itself every day. The patterns are there every day. Luciano, same thing, right? 50-50. 50-50 with no divergence. You did have the 50-50. So Luciano, the same lesson. From a bad bottom, guys, it lessens the chance. And then John showing a NASDAQ trade that looks like it's coming from a good top. It's hard to tell. Strong triggers. Everything pulls back, right? There's that pullback to the area right inside of favorable large triggers. It's a 50-50. John Novak, were you coming from a strong top on that one? That's the only question that I would have about that. And he may not be listening. He may already be in his next trade. And it goes right to Fibonacci support, doesn't it? And I don't know if anybody's watching NASDAQ, but did that come from a termination condition that created the full reversal? Because that increases the odds. So much so, guys, let me show you a picture. This is a picture that was put together forever and a day ago, guys. Lack of divergence, lack of areas creates a bad high. 50-50 is less likely to work. And ultimately, it continues the trend, guys. This is a picture that was put together. This is May of 22 contract of crude oil. So this is a pattern that repeats itself every day, guys. So if you took that trade, and it's totally cool if you took that trade, right? It's all right. There's a lesson in it. There's a great lesson in it. Take this picture, copy it, go to your spreadsheet and go to chart reading things and drop it in there. Re-annotate that chart, guys. And call this one 50-50 bad bottom. Less likely to work. And build that memory through repetition. Guys, the hardest part about day trading isn't learning the patterns. It isn't recognizing the entries. It's not identifying the advantages. It's sitting on your hand and doing absolutely nothing when the rules suggest, when the pattern suggests that the advantage isn't there for you. And then Ron, mid-band not a full bar away from the large triggers. So Ron, you're taking Fibonacci support with the large triggers a full bar away, and you're taking that little shot to get back and close the gap. Very non-Ron-like, right? Fighting momentum, going counter trend. Nice trade. Great execution. It's just chart reading, right? That same gap theory that keeps you from taking shorts, Ron said, let me get to the other side of these small triggers and let's see if we can pull back to it. That's $200 in an instant right there. Nice trade, Ron. And look, it closed the gap, didn't it? And then for those of us that don't have that fib right there, this is no divergence pulled back to the area of resistance right there at those large triggers after a 50-50 doesn't work from a bad bottom to see if maybe it comes back. Oh, Jose, it's very low probability. It is very low probability. What are you doing? You're fighting triggers. You're fighting direction. Even with the fib, it's low probability, guys. But that doesn't mean that it's not a potential trade for somebody that studied that pattern over and over and over again. 50-50 from a bad bottom. Doesn't work, right? Pulls all the way back, closes the gap right here. If patterns are true, guys, 71.73 is probably where this market wants to go. Marshall, I love this trade. Bad bottom, doesn't finish the move. Everything rolls, smalls below the large, below the one-to-ones, the large have turned. You let it close the gap, and now you're looking for a continuation down. Marshall, I don't know if you know just how nice that trade is. 50-50s that don't work tend to provide opportunities in the other direction. You just got to let everything say it's going the other direction. Great opportunities for quick profits, right? At that previous low. Easy to be break even on the trade by now. Nice trade, Marshall. You don't have this red fib? You had a termination condition right here though, right, Jose? Didn't you hit it to the, where did you hit it to the tick? Was it right there, 72.35? So even from here, 50-50 doesn't work. Everything rolls, large triggers are below the areas, right? So if you get rid of that fib, it looks even better, doesn't it? So we've got some discrepancies, without a doubt. And that happens sometimes, guys. It might be one tick of data. It might be corrupt data. There's ways to make sure that you start fresh tomorrow. And guys, I'll do that. I'll do this as well. Go through and get a clean start. When's the last time you guys did this? Tony, Jose, Ron, when's the last time you got rid of all your charts, templates, workspaces, and just started fresh? It's been a week. And I'm just asking. I'm not saying that that's the problem, but that's a great thing to do. Resetting, making sure, do not merge. Tools, database manage, resetting, repairing. That may work on 8, guys. Have you done it on 8? I got so used to doing it on 7 that I don't think I've ever done this on 8. That might help. And man, so far fulfilling expectations, isn't it? Look at that pattern. 50-50 doesn't work. Everything rolls. Price accelerates away from the large triggers. Closes the gap. Let's see if they find 84, guys. Now we have a 50-50, right? Small's below the large are wide, they're angled in the direction of the trend. 72.14 has the potential to break, but it hasn't broken. Let's take a box from the bottom of our triggers to the top of our triggers. From our lowest point of resistance to our highest point of resistance. It's an 11 tick range. And now as the market moves down, so does that window of opportunity decrease. See how that just worked? We went from an 11 tick window of opportunity to one line inside of favorable large triggers. Still 50-50. But if you were looking to take that 50-50, doesn't it make sense? Momentum says down, direction says down, it's coming from an area, everything says down. And guys, it's on its way right. It's on its way right where we expected it to go. So one of my favorite phrases, Marshall, when your trade hits these profit targets, I want you to do me a favor. I want you to come back in the room and I want you to say bingo. Perfect. Guys, when your trade reaches, whoa, it just kicked me out. Uh-oh. It's so dark in here. Not really. I'm still sitting in my room. It's cool. But let's get back to that education room. Get up here. Guys, you all work really hard to get to where you're at, right? You all work really hard to recognize these patterns, to take advantage of them. When you win, brag a little bit. It's awesome. And then Jose, for you, it was a good top. Well, not quite. It was a 50-50 that didn't work, right? Not a strong top. It was a 50-50 that didn't work. But what's the other side of that? Is that 50-50 that didn't work, Jose, came from a bad bottom? And guys, look at that. To the freaking tick. If you're not absolutely amazed, let me know what it's going to take to make you amazed. Holy smoke. Bazinga. Ron, bucking the system, right? Ron says, I recognize patterns. I'm going to get in, get out, make a little money. Beautiful trade. Knew where it was going, didn't we? Does anyone remember an hour ago when we said this bad bottom? It's likely to make it to that next key Fibonacci area. Does anyone remember that? I hope so. Because this is the patterns, guys. The patterns repeat themselves always and always, right? That's okay, David. There wasn't an entry here. If you were going to get this trade, it was this pullback to the resistance right there at the favorable large triggers, right at those large triggers that have rolled. If you didn't catch this entry to get down to that Fibonacci area, then you didn't have a clear path. It had to be up there where Marshall got it, or you had to take a piece of it like Ron does. And David, one thing you're going to realize is that 90% of what we do is reading our indicators. Your entry was too high. Where were you trying to get in? Show me a picture. Can you take pictures yet, David? And then we'll talk about your missed entry compared to the rules. And maybe we can do a little refinement and get you a little better. And that's what we do. Paul, he doesn't. He has absolutely no idea. But he knows that when it looks like this, the probability is much higher. Look at the trigger lines and look at the price bars, Paul. Price bars outside of the small trigger lines. Your entry was at the pink line, and the pink line was up here a little bit, wasn't it, David? So your entry was probably about right there. So as this pink line is moving down, it's okay to keep adjusting a few ticks below it, and you almost, it's like leading the passer, right? Or if you're a hunter, leading the bird, whatever. If you're shooting skeet. So a couple ticks below that area of resistance is typically your best bet. Trying not to time it to the tick because they're areas. And it's because they're areas that we treat them as such. And we look for that window of opportunity. And that window of opportunity comes from, we're looking for a couple ticks above that best of the best. Heard of telepathy, even called telepathic. Telepathetic. That was bad. Dad jokes in the room, guys. You're absolutely right, Rain. It was not, was it? It was not a high probability trend trade because we reached a termination condition. So if you took this trade, you took it based on strong triggers and momentum and a tiny window of opportunity. And then 71.81 became your problem place, right? Where you had to make a decision. And you had to make that decision as well. So let's go through that because, Rain, I think that is let me show you this, guys. If you took this trade, and whether or not you take this trade is entirely up to you, right? Let's make it a little bigger. This pullback to the fib, Rain, is that what you're asking? Directly into a termination condition as well? So what you're saying is, Rain, you're saying with those strong triggers, and it's supported by the 21. You guys pointed that out to me earlier. So guys, this is where management comes in. If you enter the market right here, right? Rain, you've identified that this is a problem area, that this could be detrimental, but you're also recognizing that there's odds favorable momentum, that we're in a downtrend, that the trigger lines are strong as all get out. Large and synthetic are overlapping. There's only one tiny spot for entry. The triggers are strong. Everything says down against this right here. So if you take this trade, you go into it understanding that it's not high probability trade, right? Which means that it has to be managed assertively. Guys, when you have to manage assertively, it becomes an if-then scenario. And this is how management works, guys. If a second divergence prints, I will exit. So you're starting to run through this in your head. If price reaches the fib, I will take half of my position off and go break even because I'm managing assertively. And I'm not saying that this has to be your management plan, but what you do, no. Rain, if I'm going to take a trade, I'm committed to the trade. If I'm going to take a trade, my stop goes where the market shouldn't, right? Because what if I put my stop here because I'm scared of giving too much back and it bounces 2 ticks above the midband, takes me out and does everything I thought it would? I'm putting my initial stop where the market shouldn't go. Once I get a reversal bar, absolutely, I'm tightening up. And at this one, you got 2 or 3 ticks of risk. So if that divergence never prints when I get here, I'm probably break even. Do I have a money sign here? There we go, credit card. I got credit in the bank. At the problem area, I'm break even. And I'm saying I'm expecting that momentum to run. So if you're going to take a trade like this, you've got to have an if-then scenario. You have to have a management plan in place. How am I going to react if this happens? If that divergence prints, what am I going to do? If I reach that first area, am I going to take a portion? Does that make sense, Rain? Yeah, every great entry creates a management opportunity. And those medium probability trades require a little more management. So what are we seeing now, guys? Let's talk patterns. Bad bottom, not Fibonacci support. It's divergence, which means that there's a slowdown. It's triggers inside, which means there's a slowdown. It's triggers inside and divergence. It means there's a slowdown. We got a little window of where this market's likely to push, right? What else do we notice? As price reaches this first area of resistance, look where those large triggers are. Let's take it one step further. If the same pattern holds true, let's get rid of drawing objects real quick. If the same pattern holds true, that holds true so often, doesn't it make sense that from a bad bottom, if we reach this area of resistance with everything down, the market may once again try to continue to that next Fibonacci area? Is this pattern recognition, guys, this little bit right here, not coming from a fib, is that enough? Whoops, wrong one. How do I feel about a 50-50 here from a bad bottom? How quickly can you start making decisions, right? Has anyone ever heard about the pattern that bad tops reach Fibonacci and resistance, mid-bands, large triggers don't follow? Sometimes, every now and then, it closes the gap back to the large triggers and finishes the move. It's never guaranteed, guys. It's never a guarantee, but is that enough to keep you out of a 50-50 from a bad bottom? What do you think? Termination, right back to resistance. Doesn't make it, right back to resistance. Doesn't make it, right back to resistance. Overruns. Oh my gosh. Little consolidation. Overruns right back to resistance, then creates a pivot stop out, and that starts the move up. Termination, bad bottom, straight to resistance. Down here, straight to resistance. Look at that, 50-50 doesn't work, right? Straight up termination. Resistance, triggers don't follow. Oh my gosh, the patterns just keep repeating themselves. Termination condition. I used to take trades. I would listen to the classroom guys. When I learned the software, I did it the exact same way you guys do it. I would listen to John Novak every morning. Every morning I'd listen to John Novak, and John Novak would say something ridiculous like, hey, guys, we're not coming from a good bottom. Chances are we're going to come up because of the divergence. We're going to catch this resistance and this mid-band. But the likely pattern, based on my 30,000 pictures, is that price has a chance at finishing that move down to the next key Fibonacci area. We see it a lot. And that's usually right about the time I'm going long on a 50-50. And it's usually right about the time when I'm trying to fight everything that he's talking about on patterns. So you start to get these pictures in your head a little bit. You start to recognize these patterns. And guys, one of the best things you can do is take pictures of every pattern you see and put it into your spreadsheet. Because if you go through the process of typing it out, of writing it down, you begin to see it. Weak triggers, Paul, you were looking for the short on crude oil. I guess thank goodness it didn't get you, right? Do we follow the 5-1 reversal bar marker with your stop anymore? Is that an old technique? So you know when I'll use that technique, Rain, is, let's say hypothetically, I'm in a long position, and if this becomes divergence being true, I'm going to know it's true 2 ticks behind the reversal bar, on the 3rd bar. So I'll use a stop here on my 5-1. If I'm in a position where my if-then is if divergence is true, I'll exit the trade. That's how I'll do it on the 5-1. Sometimes I'll do it, let's say that I'm in a long position and I'm coming into an area that may break because of the momentum. Sometimes I'll put my stop and I'll say, well, a reversal bar takes me out at the area. But that's up to you. That's got to be one of those things where you play with different scenarios. More often than not, if you're chasing a 5-1 reversal bar, it's going to tap you out and then finish doing. So if it's arbitrary, no areas, nothing like that, it's a less effective method. But if you're using it at an area, and of course I'm getting bumped out again, guys, sorry about that, on my way back. But if I'm at an area and I'm thinking to myself, all of my trigger lines suggest that this area is going to break, but I'm not sure that I want to leave 5 points of risk hoping that it breaks. Yeah, then for example, this is that furthest point. I may put a stop right here. It either breaks or it doesn't, right? But I'm not going to give back $1,000 on hoping and maybes. All right, you should have me now. Am I back now? Guys, can anyone see me? Oh, you know what? Hold on one second. Whoa, one man's junk is another man's treasure, Gary. I hit the wrong screen. There we go. Thank you, Tony. Mid-band, potential termination, right? Same with resistance with no trigger lines through. Large below the reversal bar marker. So many reasons. It could break or it could reverse. I love it. Gary's saying, I have no freaking idea what's about to happen. Therefore, I choose to do nothing. All right, so here we go again, guys. This is going to be the one probably that breaks the rules. I have a 50-50 barely on resistance from a bad bottom. I don't have any areas inside of favorable large triggers. Here's the top of my triggers to the bottom of my triggers. Just talking through it, what do I see? I see a bad bottom. I see odds favorable. My small have barely eked through. And I have no areas inside of favorable large triggers. How many things am I willing to give away because I want to be in a trade? No rule. Gary, market flow. And let's talk about this. After rules met. So if you don't have rules met, market flow doesn't need anything, right? Oh, really, Paul? I hate to say it, I thought that you were kidding. Oh, then I apologize that I feel like I left you in the dark that long. I thought I've said it. Maybe you're running the kids when I say it. For those of you that don't know, I was an English lit major. And I'm a big fan of words have meaning, right? I'm a big fan of the words that we use. And I think that John nailed it when he described the medium probability trade. When most indicators line up for a trade, however, a small issue exists. So guys, when you're talking about 50-50s with weak triggers, that's a couple issues, right? And yeah, Paul, I think that that's key. And that's where my brain goes, because a small issue is not some small issues, right? Isn't it cool that you can still have aha moments a year into it? So if I've got a 50-50 and weak triggers, and guys, let's see if we can find an example of a weak 50-50. I'll see people take this one because they say that the small triggers went through. Well, now we have an area that hasn't broken and we have weak triggers, right? 50-50 mark, but you know the smalls made it through. But when you've got some people take this, well, the smalls were breaking through, becomes problematic, doesn't it? Look at that, bad top, 50-50 doesn't work, right? Oh, patterns, how I love you. And then a termination condition. And we go back to the next area. So when we're looking at them, you've got to think about patterns. And that's one of the keys, guys. You got to think about what you've seen before to help you recognize. So remember earlier, everyone's like, oh, no, it's going. It's totally going. Look how much it's overrun. And we were willing to give up the fact that it was a bad bottom. They're doing it again, aren't they? That's kind of it. I don't know what's going to happen, guys. I never know what's going to happen. I've come to terms with that I have zero control over the market. I never know what's going to happen. The only thing I can do is pull the trigger when there's a statistical advantage, right? When the pattern that is presenting itself has been proven through my study, through my repetition to win more than it loses. That's my job. That's the only thing I control. So my execution is the only thing that I control. Right now, I have a 50-50 from a bad bottom. 3 years of watching indicators tells me that this is a lower probability trade. This isn't the best of the best because I'm not coming from a Fibonacci area, which means that the likelihood of me in my own personal trading putting a limit order right here at support, it means for me, it's not my trade. But it doesn't mean that it's not yours, because some people will say, this one wins 40% of the time, but when it wins, it typically flies to the next area. So this is acceptable risk for me to take that trade. Guys, I can't tell you whether or not that's right or wrong. I can't tell you whether that should or should not be a part of your plan. That's the study that you have to do. Am I willing to take a 50-50? But I know that I've had a lot of students that have come back and said to me, hey, Mark, I keep losing 50-50s. And when I tell them, go see how many came from a termination condition, there's a direct correlation. That's where this classroom is freaking magical, guys. Because when you take that 50-50 and it doesn't come from a good top or bottom, right, then you can go through that process of saying, hey, this probably isn't my best look because of this. Maybe I pump the brakes next time. Because it's a pattern that I recognize. Everything, both charts have strong momentum, even strong triggers stay strong at pullbacks. This is a momentum trade setup. Okay, so Rain, this fits your rules for momentum? Are you sure about that? And guys, my brother is freaking smart. There's no doubt about it. I'm inclined to say that John Novak, even with this much momentum from a bad bottom, probably didn't try to enter the market on that little momentum style pullback. If I had to guess, I don't know. The reality is that I don't care what John Novak. Divergence is a termination condition. When did I say divergence is a termination condition, Rain? If I'm not mistaken, and I may be, because you know what? I'm human like the rest of you. When I talk about divergence pivots on the 13.2, this is the picture that I go back to. Well, no, they're not. Okay. See, this is great because this is a misunderstanding of the lesson, isn't it? Watch this. And it is, and that's okay. And thank you for bringing this up because this makes life easier for all of us. So when we talk about termination conditions, right? No, I'm right here. A divergence high and a divergence low, yes? And that's what you're referring to? And then Rain. Oh my gosh, I don't know which picture I showed from yesterday. Did you save it for Exhibit A for this trial that we're on? So let's go to this one. Let me find all the termination condition pictures that I may have posted Is it this one? Whoops. Cool, so let's talk about this one then. Termination conditions defined. So, Rain, this one comes from, and I'm going to show you, that is this picture, but this is a specific example that reminds people that the areas that can be termination conditions are also, well, no. And this is where the misunderstanding comes in, Rain. So what's the recipe for a termination condition? Easy with the question marks. Price reaches an area, yes? So when price reaches one of these areas, Rain, I want you to relax just a little bit and maybe understand the lesson real quick. Rather than telling me I'm wrong. Price reaches an area, Rain. When price reaches an area, your job is to gauge where the trigger lines are. Price reaches resistance. If the trigger lines are below, it's a termination condition. Okay? Price reaches an area, Rain. I want you to write it down on a piece of paper. Price reaches an area. And let's use this as an example. Price did not reach an area here, Rain. What happens when divergence prints? Let's go through that, and maybe that'll help a little bit. This cyan line doesn't print until the third bar, until all the calculations have gone through to determine that momentum was lost on the third bar, Rain. So all we have here is a pivot. This pivot ultimately provides divergence. That's when the cyan line prints. There is zero cyan line coming into it. Price did not reach that cyan line. Price reaches the cyan line. Trigger lines remain above. Rain, now this is a termination condition. Those are staying on my list. Does that make sense? A pivot is formed. Divergence prints. Guys, this divergence wasn't here when the pivot prints. When price reaches the divergence line and the indicators, the trigger lines stay below, now this divergence high is a termination condition. Price reaches this divergence low. None of the trigger lines break through until they get to the other side. It's a termination condition. This divergence is not present until 3 bars later. So price reaches the area. If the triggers do not cross the area, it's a term. If both sets of triggers cross, it's broken. It's no longer a termination condition. So this pivot, this divergence isn't a termination condition, but this support is, because none of the trigger lines have broken through. This pivot isn't a termination condition because it hasn't been retested. And I'm not sure that it ever did get retested. Does that make sense, Rain? So this isn't a termination condition. If price comes back, and here's a great example, not a termination condition because it's just one pivot. When price comes back to it, that's where the challenge happens. Does that make sense? Price reaches, and then you just ask yourself where the triggers are. So that line has to be reached. If the trigger lines remain below, it's a termination. If they break above, it's a clear path. So why did I make that picture? about the divergences. Not because there's anything special. All of these are still price reaches where the trigger lines, but the divergence lines tend to be the most ignored. And that's where this picture came from, helping somebody out that they had no problem recognizing when price reached one of these areas as a termination condition, but they were finding themselves ignoring these divergence lows, these divergence highs when price reached it again. So that's where this picture came from. And I hope that clarifies a little bit, Rain. But I assure you that a tremendous amount of study has gone into these. And it's okay to not always get the lesson. Sometimes a little clarity comes in. Sometimes things have to be said. Okay, so let's do this. I like it. I love it when there's challenges like this, Rain, because this is how we get good, right? So check it out. Hopefully the 5-1 will give us a divergence here, and this will help you. See how there's divergence potential? No worries. And we'll see if it prints. All right, Rain, I'm going to cover this divergence line, and I'm going to make this pretend that it's Fibonacci support, okay? There we go. So as we trade down to Fibonacci support, price reaches it, no trigger lines go through, right? That's the recipe. Whether it's Fibonacci support, whether it's Fibonacci resistance, whether it's one-to-ones, or even if it's a divergence low. It's just a matter of reaching the line. That's all it is. And the reason that one divergence isn't a termination condition, so watch this. And let's see if it works. Hopefully we'll get a little down push here, because you're going to get a reversal bar if divergence is going to be true. No, it doesn't have to be a fib or a one-to-one. Rain, go back to it. Price reaches the area. What are the areas that price can reach that may be termination conditions, Rain? Those areas may be a divergence high, a divergence low, red Fibonacci resistance, blue Fibonacci support, yellow one-to-ones. Price reaches the area, and then you ask yourself where the trigger is lying. So, and let me see if I can do this. So, Rain, this blue Fibonacci area isn't a termination condition, right? Why not? Because price hasn't reached it and the trigger lines didn't remain above. Does that make sense? I think it just clicked in my brain. Price hasn't reached this area, so it's not a termination condition, it's just a fib. Price hasn't reached this blue Fibonacci support, so it's not a termination condition, it's just a fib. And the cool thing is, areas that haven't been reached yet aren't termination conditions, they're targets. Price hasn't reached resistance, so this is a target, not a termination. If price reaches resistance and none of the trigger lines break through, then it becomes a termination condition. Does that make sense? I think I had to talk it through my head as well. So one-to-ones might be a target, but until price reaches them, they're not a termination condition. And Rain, I think you just gave me a better approach to teaching these. No, a divergence line is not different. Have fun, Ron. A divergence line is no different. Price has to reach it. Triggers can't break it. And just so I have a little clarity, why do you think divergence should be different? And that's where this picture came up as well. And let me show you, Rain, why I created that picture that I apologize confused you. So blue Fibonacci, red Fibonacci support are reflections of pivots in the market, right? Mentality in the market, buyers, sellers, creating pivots, fighting one another. Yellow one-to-ones are the exact same. These divergence high and lows, it means that there was a specific point in the market where not only could the in control force, like buyers or sellers, not push any further, but they also lost momentum. So the line itself represents that loss of momentum. When price reaches it, it represents the opposing force trying to get through it a second time, if that makes sense. So there's your divergence. That didn't print till all the way down here. So this by itself means nothing to me, other than a loss of momentum. It's when price gets back to one of those key areas. And the reason divergence is a part of what we do is because divergence means, and let's do it in pictures. Divergence means that the sellers were 100% in control. And right here at 71.34, the buyers took over and they robbed the sellers of their momentum. So what happens is if those sellers get pissed off and try again, the buyers know. They know this price. This is where the buyers said, to hell with you sellers, we're going up. So if the sellers try to make it back down to that area, doesn't it stand to reason that there's a boatload of buyers waiting to push back? And this is why price reaches the area. And if the trigger lines don't break through, we call it a termination. Does that make sense, Ryan? That's kind of the psychology that goes behind it a little bit. It's not the first loss of momentum. It's when they try to break through that again. And it's just the buyers saying, this is where we don't want you to go any lower. And then if it's a PSO, exactly, that pivot stop out, Rain. And this is what happens quite a bit. And it's called a pivot stop out because that's exactly what it is. So let me show you. Let me get to the tutorial. So when you have that pivot stop out, we'll go through the same thing. So the sellers are in control, right? And the buyers said, nope, no more. And they push up. And the sellers are waiting somewhere at a key area. They've already decided. Very often it coincides with a midband or resistance. And they say, nope, we're going to push it one more time. Maybe not enough of them took their profits. Maybe some of them are looking to get long. But what you'll see is price will exceed that pivot low or that divergence low just a little bit. Everybody that went long just got stopped out of their long, right? D, take care. And then once everybody stopped out, the buyers say giddy up. That's the idea behind a pivot stop out, is the buyers take over and the sellers try to get back through and the buyers let them all get their hopes up, right? Or everybody that went long, the sellers push them all the way out and take them out and get someone on the other side, and then it pushes that other direction. Does that make sense? So that's that losing momentum, triggers can't break through, right past that key area, and then they unload. Rain, I feel like you're not listening to me. Nice job, David. What does the divergence line mean? No, it's okay. What's it mean on the termination list? That's what you're asking? It means that this is an area that when price reaches it, if the trigger lines don't break through, it's considered a termination condition. That's it. Don't give any of these weight over the other, Rain. Support, resistance, 1-to-1s, divergence lines. These are the areas that when price reaches it, you have to go through. You have to go through it. When it reaches it the second time, not a term. Price reaches it, trigger lines don't break. It's a termination condition. That's it. Does that make sense? That's all it is. Yeah, just like a fib. Same thing. I could make this solid blue and it would have the same reaction, right? And Rain, I appreciate that you had questions on this. First is no term, absolutely. First is a loss of momentum. And then when that momentum loss gets retested and the trigger lines don't break, now it's a term. You want to know the truth, Rain? This one confused the hell out of me in the beginning too. I'm like, but it's a divergence low. Well, it just means that there's a loss of momentum. It's when they retest it, that's when we start seeing things happen. Awesome questions, Rain. Thank you for that. When I was teaching my wife to read indicators, she would ask me questions. Yeah, the retest is the key. She's like, well, I don't understand that. And then she would make me say it 1,000 other times. What happened in crude, Gary? It went up. That's it. Rain, great questions. I appreciate you asking them. I really do. But remember, just because, no, it wasn't pain. It wasn't pain. But remember, if you don't understand it, it doesn't mean that it's wrong. It just means I got to find a different way to explain it to you. Paul, great looking 50-50 without divergence. And you waited for a signal because it was lower probability. Nice job. Luciano, same thing, 50-50 without divergence. Beautiful entry. Last one for the road, Mark. I love it. And then Paul giving me broken links. And that was medium impact news at 12:05. Paul, you had medium impact? Today's Tuesday. Oh, yep. Low impact. Yep. It could affect anything, couldn't it, Gary? It's just a news release. And guys, it doesn't have to be the news. Somebody may have just said, hey, I'm going to take my 10,000 contracts off and the market's going to rocket up. Or someone said, I'm going to buy 1,000 contracts and the market goes up. Guys, we don't control it at all. The only thing we control is whether or not the rules are met, guys. That's it. Which means that some of you might have gotten short at a mid-band, maybe down to the key area. Who knows? So guys, that's it for me today. We ran over a little bit. No worries. I'm cool when that happens. Makes me happy. It means you guys are asking questions. And guys, I want you to recognize that exchange. It's important to ask those questions where you need clarity, right? That my job is to get you where you need to be. And sometimes it takes a minute. Sometimes you just may have an idea that isn't the right idea. Or sometimes I might say something that just seems completely wrong. But if we have the conversations, guys, conversations fix everything. So always give me that opportunity. And guys, I'll see you in the morning. I'm going to go look for some high probability trend trades and see if I can't make a little money this afternoon. If not, I'm going to go swing some golf clubs. Guys, take care. I'll see you tomorrow.